when we looked at the results when they came out, a lot of times you'd find these fabulous beats and the stocks moved lower after reporting. Or I don't know if it was, all the way back to last August, but it certainly has been. We have seen a significant capitulation this year by bears and skeptics who moved into the market. Plus, you've got a broadening appetite for equities that has occurred, both growth and value, as people move away from concentrations in tech. And on top of it, great expectations for Q1 earnings season after a very good Q4. The news was sort of baked into the price.
Okay, big tech got hit yesterday. We're seeing NASDAQ futures down again right now. John, I know 1 or 2 days does not a trend make, but it just feels like that tech has had a number of problems the last couple of weeks and months. It kind of goes down, then comes back up, then goes down a little more. Fear of capital gains rates increasing down the line as well. 22, 23 times earnings on the S&P when you include technology. Is technology, Apple, Amazon, whatever, is big tech's run finally done?
I don't think so, Brian. I don't think we're going back to the abacus or even to the slide rule. It's a world of chips. There's a shortage of chips. We're dealing with that right now. We aren't. Well, as investors, we have to deal with it. But the tech companies are dealing with it. Probably just the way we got a warp speed vaccine, we'll get warp speed chips. You never know. In a highly technological and globalized world that's also regionalized, with a lot of money available with interest rates low, this could likely be remedied, a lot of these supply chain problems. We do have to think, if you look at Bitcoin is down, I think, 12% from its peak, even though it's up earlier this morning when I checked. But what the NASDAQ is down about 6% from its peak. Based on the fact that the NASDAQ in the last 12 months is up, as of last night's close, 46.96%. That's total return. Price return 45.79. You got to figure you got to let it rest for a while. A haircut is called for.
Yesterday, John, or I should say Friday, when we were rising, we were basically on your year-end price target for the S&P 500 to 4,300. Great call, by the way. You nailed it, but you nailed it in May.
Yeah, we put that target in last December, and at that time it looked high. We were tied for the second highest with another firm. Our numbers just happened to match theirs. But what we look at right now is we think we're going to be in a period where we'll likely get an opportunity for nervous investors, traders, take some profit without FOMO near term. But we think the trend remains the same. Secular trend is technology is changing everything. Tech is parallel to where the auto was in the early 20th century. We don't see tech at a plateau. The problem is demand seems to be outstripping supply of chips.
Shepard Smith here. Thanks for watching CNBC on YouTube.